Okay, welcome everyone. We'll start our first lesson. We are going to start a new unit, new modules, which is Finance for Managers. My name is Anjum Sattar and my email address anjum@ukversity.co.uk. Please, if you have any question, just drop me email and I'll try my best to get back to you as soon as possible. So today lesson will go through our LO1, and LO1 is understand the importance of financial data in formulating and preparing basically and delivering the business strategies, how we can deliver the business strategy, whatever. So before starting, will discuss what this unit is all about, what we're supposed to be learn. So the aim of this unit to develop the knowledge and understanding skills that will enable them to be analyze internal and publicly available financial information. So what do you think? What sort of information is publicly available?
That'd be stuff on Companies House website. So that'd be annual returns.
Excellent. So companies' financial statements, those are available on the in company house or in the security exchange, those are on the public domain. So that's the key. How we can use them for internally, and internal information can be in terms of management accounting and financial accounting, which will go through the difference between these two and financial statements available on, and a lot of reviews or various other on trading standards and various other uh, corporate websites as well. A lot of information available, those we can use it. Okay, so LO1 is understand the importance, why is the financial data is important, so which will go through today lesson. Financial data, what is meant by financial data, how we can collect the data, where the data is available, what is meant by business strategy. These are the key things, evaluate sources of financial data, where we can get the financial data. It can be internal, it can be external. External in terms of the financial statement, internal are internal reports, our budgets, our reports, our forecasts, all these are internal. Financial data information in relation to the business strategies, how this information help, and they is really, we working towards strategy, what are the objective we are achieving. It double information will also help. If we not, what sort of corrective action we can take to be achieve our business strategies, our strategic objective. Analyze the risk. What is meant by risk? So which we'll discuss, risk is mean probability of happening something. And one of the key in merit will discuss about creative accounting. A lot of people are very creative, like a Tesco, one of them, they manipulate the profit 180 million to 220 million they shown in the profit and loss account in the financial statement. So which we'll discuss. So we have three learning outcome. Each lesson will go through one, and we have an inductive content, what we're supposed to be learn. 2-day lesson, which will go through all this in 2-day lesson, the key things. So we'll discuss sources of financial information, internal, external. Financial information, profitability, cash flows. We can look around in terms of the financial statement that will help to be projections for future as well, based on and need of financial information, why we need in our organization. Of course, this we need to make of various financial decisions for future. We look around stakeholders and meeting their target. Of course, in our organization, we have to meet the target to fulfill the and expectation of the stakeholders. Stakeholders mean anybody who has any interest in the business is called stakeholders. Internal, external need. All this will be focused in our discussion, and we'll go through. Any question?
Not yet.
Okay, so key command word we have today is evaluate, make a qualitative judgment and assess, offer a reasoning and judgment of the standard and the quality of the situation and the skill of relevant facts if we're discussing. So we're hitting these criteria. So that's our inductive contents. What do you think? What is the difference between management and financial accounting? Is there any difference? What do we know about management accounting and financial accounting?
As it says there, management accounting will be for internal use of the business to make sure that it's profitable, and then financial accounting will be external.
Excellent. So financial accounting is external, management accounting, as the word management, yes? So we need for manage activity for internally. Purpose of information, of course, is help to do planning, controlling, and decision making. It's not a legal requirement. I should keep my record. It's a legal requirement. I should submit the financial statement in the company house. That's a legal requirement. For management accounting is not illegal, but it's a very crucial for the decision making, costing. Yes, so we should be produce, and we minimize the cost. We make the right decision. That's why investment appraisal and various other concepts come. Format management accounting is, we don't have a certain format. We can produce whatever way is useful for us. But the financial accounting, we should follow the proper layout, the standards which we've been given, which we'll go through today lesson. We'll look, few financial statements, financial and non-financial. So in management accounting, information can be both financial and non-financial. We'll say management views about the product, management reviews, yes, investment appraisals, various things can be in terms of management accounting. But financial accounting, just more financials instead of. So time period, management accounting, it's up to us, keeping in view of the needs. We can produce a report weekly, monthly, annually, but the financial we can normally every year, and based on the historical data, past information. Any question?
No.
Okay, we already learned in other subject as well what the word strategy means, and different definition is a long-term goals of enterprise organization, adaptation, course of action. So strategy is a course of action. Allocation of resources, we learn 3 M's. Yes, 3 type of resources, how we well use them. We discuss various authors like Monsberg theory, according to Henry, and various others, authors as well. Strategy is creating force between the organization and environment. So we discuss about external environment. We need to look around what is happening now in terms of virus and various other, organizations, and they have a different strategy that fit according to the environment now. Because main thing now this period, they have sustainability. If they sustain it, then of course will continue. So sustainability is a big problem. So of course, government inject fund, and we have to make strategy how we can claim these. So strategy is more than just fit and allocation of resources. Strategy is about different. Yes, we can be different than others. Maybe we'll allow people, like one of our organization yesterday, they said, they will pay 80% wage to their workers instead of 100%, because they will sustain in a business. Instead of making people redundant, or people will not get the salary. Any question?
No.
Okay, next now we'll look data and information. So first, always we have a data. We have a raw facts and figures. When we process the data, it's become a information. When we have a information, it's become knowledge. So if you don't have a information, it means you don't have a knowledge. So information is a key thing. And we normally call information is a library, yes, for business. It's help, businesses to make right decision. And then we can take the action based on knowledge. Any question?
No, carry on.
And next is the financial data. It derived from the many sources, as we discussed, yes. So financial data is very important. That will help to make our decisions. And we look at the data. First, we have a data. When we process, it's become information. Then information become knowledge. We know the garbage in and garbage out. Yes. So if you record the right data, collect the right data, process it rightly, and then it's become information and knowledge. As an internal source, Yes, your accounting system, CRM system, customer relationship management system, ERP, enterprise resource planning system. Yes, various systems, those provide us internal source of data. Manages directly from one supplier, we can buy things. If we have a supplier data, if we have a customer data, we can promote product. If they give us uh, permission, we can send them new product offers which we want to sell them, and we can use various spreadsheets. Those internally we use, that will those will help, that data is available. Then external, we all already said earlier, is a company house. Websites can be database of financial information, library, research documents. Okay, what need to be good information? It need to be up to date. It need to be relevant. It need to be accurate. It need to be, if you're paying money to get it, is worth the cost. Benefit should be more than meet the needs of the user, easy to use and understand, is reliable, because sometimes is a lot of fake news. Yes, a lot of social media, maybe the figures and the things not right, the information is not right, especially noise are happening a lot. Yes, everybody different views of different things, and maybe the information is totally, yes, misled us. And then we can look around. If we looking the financial information, is good to be understand the accounting system, where accounting start. Accounting always start with the transactions. So what is meant by transaction? What come in your mind, transactions?
It's a transfer of funds or uh,
Well done. That's all about. Basically, you buying things. Yes,
yeah.
is one transaction. So sales is a one transaction. Purchase is a one transaction. So, and we buy furniture. So furniture is the one transaction. Then we have a primary document that provides lot of information. Primary document, sale invoices, purchase order. These are primary documents. Then we have a book of prime entries. Book of prime entries such as sale day book, purchase day book in accounts. We carry on recording that. Those provide the information. Product A, product B, product C. If we have a different product, ledgers, yes, different accounts, like how much we have to receive the money from how much creditors we have, how much debtors we have, how many goods we sold on cash. All this information we can find and collect, and so why company keep record is internal control purposes. That's why it's quite crucial. It's checking procedures of all transaction, help to prevent the fraud. Customer queries can be addressed efficiently if we have a record. They used to generate accounts, of course. It's a legal requirement. We keep records for 7 years at least for tax purposes. Any question there?
No.
Okay. Then, of course, we discussed transaction, primary document, and book of prime entry. Those also provide the information, internal. And then accounting consists of two elements, recording and summarizing. You record transaction, you summarize it at the end of the month. Then from these, you prepare the financial statement, such as income statement, which shows the profit and loss of the company within a year, and the statement of financial position, which shows asset, liability, and capital. So it's called financial position, also known as balance sheet, and this also known as profit and loss. In addition to it is, of course, the requirement for public limited company, they have to publish the information. Yes, it's quite crucial for public limited company. They have to in the security exchange. Yes, of course, in if they listed in the stock exchange, they proceed the shares. They should publish the information. Okay, that's, and then we look. These are the financial statement, those prepared by companies such as Morrison. Today we'll discuss, and I picked the example of Morrison. So statement of comprehensive income. These are the four statements we prepare in accounts. So statement of comprehensive income, also known as the income statement, which is profit, also known as a profit and loss. It shows how much income, how much cost, how much expense, each area we can find. Statement of financial position, it shows how much worth of asset, liability, and capital company has. And then statement of cash flow, it shows how much cash in and out from the business in different business areas. Chain in equity, it shows how much dividend we paid, how much retained earning we have, retained profit, the profit we not distributed to shareholders, how much dividend we paid, how many shares we issued during the year, and how many assets revalued. All this shows in the statement of chain in equity, which we'll look now. So I copied this, so we can go through now. So first, maybe we can look around statement. So if we look here, this is consolidated. Consolidated mean every company have so many different subsidiary company, and we can consolidate one statement as a group. So revenue. Can we look? Yes. Can we see this? So we can interpret the information. Yes.
Yep.
So what's happened 2019 and 20, the Morrison figures, gross profit, yes?
Mm-hmm.
So last year was 696 million.
Yep.
And this year it dropped down to 681 million.
Uh-huh.
So it's mean drop. If we look the overall profit after minus all the adjustment and expenses, so what profit we have? Profit before tax per suppose, yes, 408.
Yep.
And the last year was 396.
Yeah, so we have an increase.
So our profit increased. Why is increased? Because we work efficiently and our expenses dropped. Even we have a less sales, yeah?
Yeah.
So but our profit dropped. So which is a good sign. How much tax we paid compared to last year, this year, yes?
Mm-hmm.
We paid less tax this year, yes? Maybe tax incentive that can be leads to we saved it. And then of course how much dividend we paid.
Is that pence? Is that pence per share? Oh, million, sorry. Yeah.
It's a million.
In total. Yeah.
And
total.
further we can go in notes 1.5 that should be explained in more detail, yeah?
Yeah.
Which we'll go through in. Then the second statement is called statement of financial position. We can look around the long-term asset, which is called non-current asset. Last year, this year and the last year, yes?
Mm-hmm.
So we can see the change there, yes? It went up. So they have invested more money in building, plant, machinery, those sort of infrastructure.
Mm-hmm.
Then the short-term asset, which we look current asset, is these are went down, yes?
Yeah.
So it means they have a less liquid position compared to the last year. If you
Based
look
on,
front,
looks like they've got less inventories, mainly.
yes, they have less inventory, they have more receivables.
Yeah.
But they have a more cash and cash equivalent, which is a good sign.
Yeah.
But inventory, they are focused on the stock that dropped.
Is that stock? Yeah. So they got less stock.
The less stock. They're keeping less stock now. So if we look against the liabilities, normally we use the ratios. We say current asset divided by current liability. We find the liquid. Yes. Normally we say 2 to 1 ratio need to be £2 worth of asset and £1 worth of liability against the current asset.
Mm-hmm.
So we have 1319. After some adjustment, we can say 1322. Yes, last year were. And when we look the liability this year, 3396. Yes, and the last year were 3349. So our liability went up. Yes.
Yeah.
So we can this divided by this figure, and we can find what is the ratios coming between, and then we can look around the industry ratios. Any question here?
So what did you say that ratio should be for that specific industry?
That should be normally not specific industry. Normally, the people say, analysts say, it should be better to be 2 to 1.
So we're closer to 3 here, so they're worse.
No, if we'll go here, so what we have now, what figures we have? So come on. Don't know why. So can we can divide? So if we look, if we divide it, because why not my? Okay, so if we divide, we'll go through proper formulas. So 11322. So we can use our normal calculator. If I'll switch screen, I don't know why not showing properly. So 1322 divided by 3396 is coming 0 point, yes?
Yeah.
Which is very less, yes? Even less than 1, yes?
It's less than 1, yeah.
Which is less than 1. Because it means every £1 worth of liability, you have only 38 pence worth of asset.
Yeah.
But think about the nature of the business, yes? Because Morrison, they don't keep it because their money is coming out from, they always have a credit 30 days, 60 days, 90 days, yes? So you can argue here, we can compare with the with the Tesco and various other, then we can say why is Morrison is worse there compared to the other company. Yes, but normally analyst says if you want to be sound liquid position and you're less risky company, it should be 2 to 1. But it's not hard and fast rule. It varies industry to industry. So I need to go through few companies in this industry, yes, and we'll see what is really coming average of this industry.
Well, so the liabilities outweigh the asset. What?
Yeah. So liability, asset we have 1.3 current asset, yes, and the liability is a 3, which is of course is more than the asset. It should be less than the asset.
Yes, that's what I'm trying to get to.
Yeah. So is this? It mean this company is a risky.
Risky, yeah, absolutely, because if their asset value is worth less than their liabilities.
Yeah. So even the liability and the asset is not equally. Yes, if it's equal, you borrow £1, you have £1 yours.
Yes, yeah.
So which you can say you're not really. End of the day, you're on the benchmark. Huh?
Yeah.
Break even. So which we can go through these ratios, more in detail.
Huh?
In further lessons we'll go through. Any question there?
No.
So we can look around, we can interpret the information, and we can make a lot of decision from based on these ratios. Then we have a cash flow. Cash flow have 3 activities. Operating mean our normal business. We'll look what's happened under operating activities. 8 to 6, yes. So it cash, our positive cash is went up, yes. Then we have investing activities. Investing activities, we're looking the cash position. So Morrison last year was the negative cash flow, and this year more cash flow. Its cash went out of the business, 467. So it means they have invested. If we look, their non-current asset went up as well because they use the cash in an infrastructure investment.
Yeah, more stores.
More maybe new logos. Yeah. So that's the cost then. Then is a financing activity. Financing activity mean how much money they borrowed. If they borrowed more, its money is a positive, but they settle the liabilities. If we look there, last year was the outflow for the cash 413, this year 318. So this year they settle the liabilities 318 million worth of. So that's why the cash went out of the business. They not borrowed it. If they borrowed it, cash will be positive. Yes? Any question? If we look overall in all areas, last year the cash position was 264. Now this year the cash position is 305.
Yeah, so there's an increase.
They increase. Where they increase? They increase under operating activity, which is their normal business.
Yeah.
So which is a good sign for the business.
Increase market share or?
Yes, it can be, the market shares, and basically their sales went up and they reduced the expenses.
Yeah.
So quickly, sell the things quick, not keeping the things more in. So that's why their current asset is low, but actually the cash position is good within. So that's one good sign as well. This is called shareholder equity or statement. So we can see at the start of the year how much worth of the shares were. 237 million worth of the shares. That's the nominal value, is written on the face value of the shares. But they sold it 178 million more than the value of the shares. Like if you have a £1 worth of the share, but maybe you're selling £1.50, yeah? So that's called share premium. Any question here?
No.
Okay. Then of course they have some redemptions, some revaluation, some hedging foreign currencies. So that's, it's normally carry on happening in the big companies. Retained earning, how much was the retained profit? Total equity was 4631. No, at the end of the year, they have 4541. Yes. It's slightly down. Their capital went down. If we look here, their share went up. Their share premium went up. Their hedging, yes, in terms of the foreign currency, that problem is down. Yes, negative now. That was positive due to the foreign currency change and the payments they're supposed to make on various, And if we look the dividend, they paid 302 million. They paid this year this dividend. Yes.
Yeah.
So we can see each year how much dividend they paid, how much worth of. So that's all, explained in this statement, and that's all provide this information. Any question?
No, I'd need to look at it in a lot more detail to.
Yes, which is quite good. It's quite, as a management level, we always dealing, these facts and figures.
Yeah.
Which is quite good to look in more details. Okay, next now we're looking our LO2 assess the needs of the financial data. We discuss about the financial data and the financial data. We look at now Morrison Strategy. What is a strategy? They put 6 priorities for the business, and we rebuild the company by defining and strengthening the brand, and we will be more competitive. Yes, mean helping customer make every penny to go further saving. Maybe we can observe, we can reflect ourselves. Yes, if we are Morrison customer, serve our customer better. We need to be think they are serving better than in the past. Especially now, they are recruiting more staff. Especially, yes, opening longer hours and helping people, provide, because food shortage. It's not shortage really. Panic buying. Any question?
Yeah. No.
Okay. Then find local solution. Yes, they looking. Another thing Morrison did really good. They made the quicker payment to the small farmer now, compared to Tesco and other ASDA even. Which is, yes, so especially helping local people, local farms. So develop popular and useful service. Yes, RM to offers one-stop shop. So the clothing section they introduce as well. They introducing a lot of other things. Yes, cafes and various other. So we need to think about what these strategies affect on sales. So what we think, if we look we already seen the figures. Are these strategies affect on their profit? Yes, their profit went up.
Yeah.
So their cost went down. Yes, but
Yeah.
that's we can look around. Overall, maybe economic situation, their sales not went up to same level, but their profit went up. Yes, because they
Yeah.
reduced the expense.
Reduce their expenses.
And then the strategy was simply and speed up. Yes, they start the click and collect. They start the home delivery and make core supermarkets strong again. Yes, they
Yeah.
looking core. Yes, their core business, because maybe test Asda and various other, they're looking more diverse. They focus more core business. Their core business is all about food. Huh?
Hmm.
And then we can, when we make a decision, so maybe we can again look around internal external data, and we look, is it helping our strategy, or we can change our strategy. Yes, so data can be internal audit reports and financial system design. Yes, authority levels. If any complexity in the accounting system, we can reduce it. Publish accounts. Yes, most time following standards, whatever the accounting standards we been. So that's, and then we can calculate the ratio. So we have a three categories of ratios normally we use. Profitability, which is normally we look financial income statement or profit and loss, that shows how much profit, how much loss. So I can look around gross profit divided by revenue, how much is my margin, what's happened last year, this year. Liquidity, like we discussed, just current asset divided by current liability. We'll use all these ratios in further lesson. Use of resources, also known as efficiency ratios, how efficient we deploy our asset. Financial position ratio is a gearing, which is mean if you have a high debt and low equity, your low shares, you borrow a lot of money from the bank, can be a very risky. Yeah? But normally debt is a cheaper than equity. Equity means you issue shares, you raise the money through issue shares, and debt financing is mean you borrow money through bank. Any question there?
Now, what's the difference between liquidity and financial position? Because they both look at the relationship between assets and liability.
Yeah. So liquidity is based on short-term asset, is near to cash. Yes, short-term asset, which is known as current asset in the. So we're looking the relationship between current asset divided by current liabilities.
And that's what you calculated earlier.
Yes, earlier I calculated,
Yeah.
which is we call current ratio.
Hmm.
So then this is gearing. We're looking debt divided by equity. Equity means shares. Yes.
Hmm.
So normally in a list says it need to be 60. This ratio is supposed to become 60%. So your debt can be 60% and your shares can be 40%. Yes, that makes 100%. Because debt is cheaper. Now you can borrow money from the bank, maybe 2%. Yes,
Yeah.
even less than 2%, because the base rate. Do we know the base rate now?
0.1, isn't it?
It is. Yes, well done. So that's there. But in the past was 3. Yes.
Yeah.
Now, if you're a shareholder, you expect at least 5% or more than 5% return on your investment,
In
because
dividends.
it's because you're taking risk. Yes,
Yeah.
so that's why we call. But that's why in the business we really want to be borrow more money through debt, less money through equity. But if it's too much debt, then also is a risk. Debt, if you don't pay your installment to the bank, you can liquidate. Your company can be redundant. Yes, administration.
Hmm.
But if you don't pay the dividend shareholder are owner in the business. Maybe this year they don't earn anything, the next year they can. So the business will carry on. Any question there?
No.
Which will go through, all the ratios in detail. Okay, next now we're looking risk. Analyze the risk related to the financial business decision. What do you think? What is meant by risk? Risk is a probability of happening. What do you think? Risk is always bad?
Not always bad.
Yes.
Can be good.
Yes. So risk can be positive, risk can be negative. Yes. So
Hmm.
risk meant by probability of happening something, chance of occurrence. So in the financial management, provide financial information, all managers within our organization. If you have information that will help you to make the right decision. Financial management system is a process and procedure that is used organization management to exercise the financial control and accountability. Financial management systems for financial manager in decision concerning. We can look around effective help to businesses. It produce reports such as accounting reports, cash flows, and various other statements. It's also when we looking the risk management side. So we looking in the information that will help to plan the risk management, identify the risk, qualitative risk analysis, quantitative. Do we know quantitative and qualitative? Yes.
Can you explain?
What is the difference between qualitative and quantitative?
Can you explain the difference?
Yes. So qualitative is mean information, good, bad, yes, excellent. And quantitative, we'd say numbers, yes, 10%, 15%. So
Okay.
this is a numerical and this is informative.
Okay.
So we can look around both. Plan risk response. Yes, we can plan if it's a risk, what response will be there. So we can make our strategy to respond, but we need information for it, and especially financial. Monitor and control risk. Yes, we can control, we can monitor, and maybe we can transfer risk as well. Yes, buying insurance and involving others. So financial systems, we discuss all managers required. Feature of good management system, keep all the payment and receive transactions. Prepaid expenses, depreciation asset. Keep track of liabilities. Yes, always track. It's like, the Krillian company, why is reach at that point? Do we know?
No.
Construction company Krillian. So because we need to look around, they have so many big projects. If they don't have a margin or not getting anything, why they taking those projects? Yes.
Yeah, I think they was working on a very, very small margin.
Yes, very, very small margin. You have to BHS. Yes, Primark is growing, but BHS. Yes, which is old store. It's not make sense. Why they not change themselves according to the environment. If the store are making the losses, why you keep in your. Yes, maybe you wait 1 year, 2 years, change it. Yes, product line, change the way you do the business. But if you in the long run you can't sustain it, no point. You can close those stores. Those are loss making unit. At least we can survive as an organization. Any question?
No, carry on.
Okay, so that's we discuss. Then the major category of management, your cash management. When we're looking financial management, it's come cash management, investment management, capital budgeting mean investing money into non-current asset, building, plant, machinery. You need to think about you buy yourself, you lease it, yes. So all these areas we need to be focused and we need to make the decision for it. Cash management, of course, you collect always good to be. Your trade receivable days quicker. You receive money in 30 days and you pay to supplier in 60 days. So you have a safety net 30 days at least. Any question there?
No.
Okay. Investment, of course, you always do investment appraisal, which we'll go through in one lesson. It's called PB, payback period. Always check the money you're investing, how long will it takes you to get money back, payback period, which will always do the time value of money. Time value of money mean the pound today and the pound you get after 1 year. It won't be the same value. So we need to measure the risk as well. If you're getting late money, what will be the risk? Then the capital budgeting, as mentioned, is long-term expenditure. Yes, investing. Financial and forecasting. Yes, we're looking the trend and the forecast for the future. Goal of financial management, always goal to maximize profit. Always you need to be minimize your cost. Whatever IT system, we need to be think about whatever decision you're making, what will be happen on the cost? Its cost need to be minimized. Maximize your market shares. Maximize your current value per share. Yes. So shareholder value need to be increased, not decreased. Maximize the market value as a company. Yes, and the existing shareholder value. Any question there?
No.
Okay, that's all about the culture we can look around in our organization. Okay, have we heard or seen what's happened with them? Now we're looking at creative accounting.
Lehman Brothers, yeah, disappeared, didn't they?
Come on, where it's gone? Okay, yes. These companies, what do you think? What we know about them?
Lehman Brothers had problems in 2008 with the global financial crisis.
Okay. What about Enron? Maybe we heard about.
Not Enron, no, not heard of. AIG, yes. Enron and WorldCom, no.
Enron used to be in the UK electricity company.
Mm-hmm.
Back in up to 2000 or 2003. World Telecom, of course, was the telecom company. These two American big companies.
Yeah.
And the reason is creative accounting. We know what is meant by creative accounting.
Yeah, you briefly touched on it earlier. I'd imagine it's manipulation of figures.
Yes. So they manipulate the figures to attract the investors. But even after a few months, they can't afford it to pay the salary to their workers and suppliers. And ultimately collapse. And that's why the new accounting standard, and even the audit firm, big audit firm of the world, they did audit. They said they are the going concern. The business will carry on as a normal for unseen period of time. They not pick any risk. They should pick it, yes.
Yeah.
So that's why the standard being set up for audit. So that was the Enron company. The shareholder lost 74 billion. Huge debt off balance sheet. The debt they're supposed to pay, they're not really shown on the balance sheet even.
How can they do that?
It's quite, because when the audit is passing, yes,
Yeah.
they not really pick the things, They should. It's a big figure, yes, being missed. If is. So that's a innovative company, yes, for the 6th year in the row prior to the scandal. 6 years, they said very innovative, fast growing, Fortune magazine. Enron American is the most innovative company, yes?
It's propped up by debt.
Yes, by that, yes. And they've been serving time, and then of course, 24 years in prison, yes, lot of, the scandal directed criminals. World Telecom, 11 billion, 30,000 jobs we lost, 180 billion worth of the losses for investors, and being penalties, yes, a lot happened. Lehman Brothers, this was over, yes, 50 billion in the loan, of course, penalties, and ultimately, yes, you're right, in the year 2008, yes. In 2007 was the rank the first most admired security firm by Fortune magazine. So in a lot of people say whatever is happening, whatever is in the magazine, maybe they just fiddle a figures. People trust it dropped significant investors. And then what is meant by creative accounting is a process where the accountant use the knowledge accounting rule to manipulate the figures, like offshore companies and things used to be happen. Yes, even was allow them. Yes, it's not mean illegal, but they use is ethically wrong, morally wrong. Existing rule ignoring some all them why the shareholders and the market reaction is related more and more manager actions, yes, directors. That they're saying, in the board of governance, that especially Theresa May especially mentioned, in the board of governance, corporate governance, there should be a representation from the union and as well as the employees representation in the board, not just, non-executive members and things. We need, more, yes, more transparent, because 571 million trillion pension fund were gone. That's the big question mark, yes. So that's, the creative accounting. Creative accounting you to hide particular bad years, yes.
Yeah.
Those exceptionally good years. Continue the pressure, always the best. Smooth out the result to give an impression, stability, sustain. So that's, how the accounting regulates. Of course, they need to be look around more. A lot of standard gain. That's why it's called lease. Lot of company they not used to show the lease. So maybe you have a lease assets and you're showing in your book of account as an asset, but you're not showing again how long you have a commitment. You carry on paying every year installment. You're showing as an expense, but you're not writing in the statement as a long term. So now is a new standard. We must need to declare how long you have a commitment for this. So investor can make the decision. Maybe you have a commitment 50 years and you have to pay that loan 50 years. So that's that's a lot of things carry on happening now, and it was happen a lot of standards share. Any question?
No.
Okay, then reason for creative accounting, of course, income smoothing, reducing expense. We can, of course, manipulate profit for the sake of uh, excessive provisions. Yes, you can depreciate asset may be very high. Yes, maybe you do revalue without looking the actual market value. You're saying this asset is worth of this. Yes, maybe you hire the surveyor companies. Yes, they will say no. We think this is asset is worth of this. Yes, so that's why the new standard you always show the lower value of the asset, not higher value in the book of accounts, because the market value can be different. Any question?
No.
So this is all about creative accounting, what is about, why we need to do, and this is all today lesson. So today lesson we learn about where we can get the information, how we can use the information for the decision making purposes, and that's we cover our LO1, understand the importance of financial data, and this also help to be delivering the business strategies. And if you have any question, please drop me email, and then I hope so I'll speak you all during our next lesson, and we'll go through our LO2 learning outcome. In between, if you have any question, please drop me email, and I'll try to be upload some articles and books as well. Hope so those will help you further to develop understanding. If you have any question, drop me email. Thanks for attending.
Thank you.